Welcome to the Victor H Investing live stream. It is July 18th, 2024, and it's 30 minutes before the stock market's going to open. Yesterday, we had a pretty significant day. The S&P was down about 1.5%. The NASDAQ was down more than 2%. The NASDAQ suffered its biggest one-day loss since 2022, which is saying something because in 2022, we had a pretty big correction that year, and the NASDAQ was down more than 30%. So is this the beginning of a trend, or is it just a one-day event? Well, having a big drop like that typically signals that there's more to it than just a one-day blip. If it was down 0.5%, maybe it's just a one-day blip, but the NASDAQ going down more than 2%, to me, means that there's more behind that. I'd like to kind of take a look at a few data points and kind of see share with you what I'm seeing. And of course, we will see what the market does, because the market's going to do what the market's going to do. Thanks everybody for joining. I appreciate it. I know it's a little early on the West Coast in California, and it should be a reasonable time on the East Coast and especially in Europe. So I appreciate everybody joining. Please bring the topics to the comments that you want to talk about, any stocks you want to take a look at. Be glad to cover those. As I get into this, let me bring to your attention something that I'm doing for the first time. This Sunday, I'm going to be hosting a conference call with other investors, and you're welcome to join. You don't need to be a member of the channel. At some point that may change, but for now it's open to anyone. I just need your email address if you'd like to attend. And it's going to be at 8 a.m. Pacific, maybe go about an hour. And the call is really just going to cover topics that are probably, front and center. And we could also go over some valuations. I could see myself doing, a hands-on valuation using the valuation model that I use. And what would be different is that we can talk about it. I think it's great to do live streams. It's been a lot of fun. I appreciate everybody's comments. But if we do a conference call, we might be able to communicate far better and probably get a lot out of it. So you're welcome to join this Sunday, 8 a.m. The reason for it, I was thinking of this idea in the past, but a subscriber mentioned it. I appreciate that he had interest in it, and I'm putting it together. Let's see if it works. And if it does, I'll keep doing it. If it doesn't, maybe we won't do it anymore. So take a look at the channel community page for more details. Again, if you send me your email address, and I'm going to go ahead and post my email that I'd like you to send it to. Yeah, so just send it to this email address, your email address, and I'll add you to the invite list, and you're welcome to attend. All right, so got some comments going. Cinematographers, wow, 6 a.m. live stream, yeah. But it's good to have it. It's always, I'm always up this early, and this is the time where you're kind of getting your head on straight, seeing what the market's going to do. This live stream is going to coincide with the opening of the stock market, so it'll be fun to watch it. Doomy Trash. Hi, Victor. Hi from Germany. Curious to know which risks you see when investing in OXLC, second stock position. Put this here, second stock position, AGNC. Appreciate it. Yeah, I could cover those. And thanks for tuning in from Germany. I visited Germany a couple of years ago in 2019, and I had a great trip, and would love to go back. I went to Berlin, and from there we went to Prague, but I'd love to go back to Munich. I'd love to go to probably 20 places in Germany. I probably want to go to 100 places around the world. So good to have you. All right. Cinematographers. Will you be shorting any other stocks outside of tech, NVIDIA? Yeah, I can talk about that. I'll show you the stocks that I'm shorting right now, how that's evolving, and really the thought process behind it. I'm not a big short seller. I'm, you know, I've got pretty good business experience and I think an accounting mind, so to speak, along with more of a technology mind. I've been working in technology for more than 25 years. I'm educated in accounting. I have an MBA. Now, when I look at markets and I see that it's obvious that some sectors are priced too high, you know, I could sit back and watch it, or I could participate, and that's why I'm shorting some stocks. So I'll get to that. Very good question. Hey, you guys have the comments going. I appreciate it. Scotland, awesome. The open is just around the corner. Yeah, thanks for tuning in. I think you're Jamie. You might be the first person that's commented from Scotland. So welcome. Yeah, I'd like to go to Munich. Um, you know, again, I probably would like to spend a couple months in Germany. Maybe someday, if I continue to invest right and have complete, financial freedom, which I kind of do, but right now I'm a family man, and my younger son still needs me around. So I love him very much, and I'm going to be around until he's pretty much completely on his own. And once that day comes, I'll probably be traveling the world, but we'll see. All right. So El Orial. Okay. Yeah, I'll take a look at that stock, um, and we'll take a look at it. I'll add my comments, although that's an industry that I'm not an expert on, and I kind of somewhat disqualified myself on other stocks that people have brought up. But I'll give you my assessment on the fundamentals. So if that's all right, we'll cover it that way. So thanks for the comments, guys. So let me go over a couple of things, and then we're going to get into these questions. So I first, the market's been doing great. The S&P is up 17.8%, and it's kind of a broken record. I apologize, but this type of upward market, I'll take it, but it's a little bit uncomfortable to think it could be this easy. It shouldn't be this easy. It should have, some volatility and some risk. So we may be seeing a little bit of that. Like, hey, you know what? The market's going to sell off. Investors are getting out of stocks, like an NVIDIA, like a Broadcom, like a TSM was down big yesterday. ASML was down. AMD was down big, 10% yesterday. It was across the board. So that is good. That is healthy for the market to give back some of these gains, because stocks are not going to go up and to the right perfectly. That just doesn't exist. So I was beginning to get really uncomfortable because I think there was a little too much greed, a little too much comfort and expectation that stocks will continue to go up. Now, are they going to get a nice correction to them? I don't know. The closest we got to a correction this year was earlier in March. The S&P went down 5.46%. And that was healthy at that time. And then we got right back into a nice upward trend, and we're up 12.5% since then. So we'll see what happens on this occasion. It'll be really interesting. It makes stock investing that much more interesting when you can get some adversity in here. I think if we see a sell-off, it may create better value propositions to stocks. Stock prices will be lower. It'll be better buying conditions. So let's see what happens. As we look at what areas would hit the hardest yesterday, the semiconductor space, which I have commented on numerous times, is priced too high. And I've been an investor in semiconductors for a while. I've made money on semiconductor. AMD was down 10%. NVIDIA was down 6.6%. TSM down 8%. Broadcom down almost 8%. So that's good. Let's get these prices down. Semiconductors are cyclical. They have good years, they have bad years. But it didn't just, stay within semiconductor. When you look at internet and content information, Meta was down 5.6%. Google, Alphabet was down 1.5%. So it's just not just semiconductor was down. Software infrastructure, Microsoft was down 1.3%. Apple was down 2.5%. So the tech space, had a bad day. Is it going to be a trend? We'll see. The stocks that did do well, drug manufacturers, so pharmaceutical companies, they did well yesterday. And it is, almost a hedge on technology. Healthcare tends to do well no matter what. If good economy, bad economy, it's doing well. And then banks did well. Banks have been doing great. I did a video on Citibank. I'm a Citibank investor, and I started investing bigger into banks in 23 when you had the big scare in banking, and bought into US Bank, Citibank, and Midwest Bank. I sold Midwest Bank and US Bank at a really nice gain, and I just kept Citibank or Citigroup just to consolidate and keep, I think, a simpler portfolio going. And that's really worked out nicely. It continues to do well. Both the big banks and the regional banks look to be doing okay. Energy did great. Chevron was up 2%, so that's good. So that's where the action was yesterday. When we look at the sectors, I wanted to look at the monthly and see, okay, how have sectors been doing over the past month? Technology's at the bottom because they had a really bad day yesterday. I think that's beginning to kind of correct, and some investors are selling out of these stocks that they have big gains in. That makes sense. Financial services on top for the past month. So banks, I know Robinhood's been doing great for me. Coinbase, Citigroup's been doing great. So those types of stocks are doing really well. Real estate has been doing well. Energy's been doing well. Oil prices have gone up, so that's doing well. Also, the potential of a Republican administration helps energy because Republicans tend to allow oil companies to explore without that much regulation, and they open up exploration into certain U.S. National lands. So that is also kind of a tailwind for energy. And then the others, consumer discretionary did well. The other ones have been doing well. So overall, it's green for the past month. And technology kind of took a back seat, but they are the king of the last year. Technology, I'm not sure if I believe this graph because technology is doing way better than that. So I'm using Seeking Alpha now. Seeking Alpha is one of my sponsors now. And, if you're a Seeking Alpha customer already, I think you already know that they have really good data, and glad to be partnering with them. If you're interested in it, there's a link on the description of the video. You can take a look at Seeking Alpha. Okay, so that's where we are with sectors. We have earnings happening. Domino's was out this morning, and they're not having a good day. They announced their earnings, and the market didn't like them. I'm not a Domino stockholder, but it's down 14%. The other one that I'm really keeping an eye on is Netflix, which announces after the market closes today. And they were down yesterday. In pre-market, they're up a little bit. So we'll see what happens there. Other notable names: Novartis, big pharma company; Abbott Labs, which is a pharma / med device company, is going to announce, and I think they have already announced. Intuitive Surgical. So the healthcare space is going to have 3 significant names really announcing their earnings today. So another day of earnings. The big names are coming up next week. When I say big names, Alphabet, Microsoft, I think Meta reports at the end of the month on the 31st. So those big names are next week. And I think next week's going to be interesting. The whole earnings season this go around has become a little more interesting to me. All right, so we covered that. Now let me catch up on comments and let's get into these stocks that you guys want to take a look at. Dimitra, uranium ETFs. So, I'm not an expert on uranium. It's I would say that I probably have better knowledge of oil, and because I worked in an oil company, as well as some other, I think, easier to understand materials like copper, steel, and so forth. Uranium, I know, is used for nuclear power and so forth. I don't have a lot to add there. So I'm going to take a pass on that just because I can't add a lot of value there. And, do your homework on that. And I'll disqualify myself from providing a comment there. Mike Victory, I see you shorted NVIDIA. What do you think about Avgo? I think Avgo has been beaten and should come back some ST. Okay. So I could talk about both. And Avgo is Broadcom. So glad to talk. I've owned NVIDIA. I'm shorting NVIDIA. I've owned Broadcom, made great money on Broadcom, and now I'm shorting Broadcom. So Broadcom's on my stocks that I'm shorting. I'm in the positive. I'm making money on those shorts. Get into more detail. So I just go over the list of, stocks that I'm shorting. I think somebody asked if I'm shorting stocks outside of NVIDIA, and the answer is yes. I'll point to the ones that I'm shorting there. And then how hard is it to make your first $100,000 of profit in the stock market? Well, I would say that, the way that I've, I guess, have gotten to $100,000 plus profit in the stock market is over time. I've learned as much as I could. I've participated in investing. I got out of ETFs and mutual funds and really got active into stocks. And I consistently make well above 100K, and year after year after year after year. Now, I never subscribed to get rich really fast kind of strategies. I'm a little more like Warren Buffett, right? They ask Warren Buffett, geez, you've made so much money. Why doesn't everybody follow your process or your strategy? And he answers because he says, nobody wants to get rich slow. That was his response. And I kind of identify with that, which is, if you kind of take it to where you learn, you invest, you learn from your mistakes and you learn from your successes. And over time, you just build a really good process, and you advance your skill set, you advance your ability, and then you become consistent. And that's the place that I wanted to get to. I'm there, but I can continue to get better. So my answer to you is that you can make 100 grand in profit per year. It's very realistic, but you're not going to do it. In my experience, it doesn't happen overnight. It doesn't happen like, oh man, within 2 years, I was making $500,000 a year. I think each year you can become better and better and better. And obviously over time, you accumulate more of more money, and your portfolio is worth more. So getting to that 100 grand profit per year mark is easier when you have a bigger portfolio. But over time, if you have a return of 15 to 25%, you're going to be doubling your portfolio probably every 4 to 6 years, and it will grow. So that's the answer to that question. Yeah. So Mike Victory is alluding to one of the comments that I just put out there, which is, if your portfolio's, 10 grand, it's going to be very hard to make 100 grand. But if your portfolio's $1 million, okay, that's very realistic to make 100 grand. And you can make 100 grand without taking a ton of risk. You can diversify and you can make consistently 100 grand. So good question. All right. So let me go from the top on questions. The first question that was asked was on OXLC. And this is Oxford Lane Capital Corporation. They've been doing well for the past year, up 10%. And let me see what these guys do. So this is a fund. Oxford Lane Capital Corp is a close-end funded launch and managed by Oxford Lane Management LLC. It invests in fixed income securities. Okay. The fund primarily invests in securitization vehicles, which in turn invest in senior secured loans to companies whose debt is rated below investment grade. Okay. So these guys are investing in higher risk debt. These guys are probably good at, assessing risk and lending to the right people. Expense ratio 12.45%. Wow, that's pretty alarming. I don't know. I freak out when the expense ratio is like 1% or higher. I'm like, I don't like paying for somebody to manage my money with very high rates. I like paying low expense ratios whenever I'm in an ETF or a mutual fund. That's very high, so I'd want to investigate that. The returns for the 1 year is 10.91. But you see these losses here. That doesn't look good. Now, if we look at the economy is doing okay. I don't think the economy is doing great. I don't think the economy is doing horrible. It's somewhere in between. Depending on the sector, some sectors are doing great. Some sectors are lagging, not doing very well. For example, retail. Retail is not doing very well, in my opinion. So this one here would not be an investment that I would entertain. There's a couple of reasons for it. Is one, I don't see exactly who they're lending, what their lending policies are, and so forth. I don't like the performance of the fund over a long period of time. You see the 3-year is pretty poor, and I'd have to investigate this expense ratio. So I'd be careful with this one. If we look at the more recent return, maybe that's 2. So they're up 3% in the last month. Year to date, it's up 13%. I mean, these are okay returns for the year, but this is what scares me is if these guys have losses, you're going to lose money, and you don't have. I wouldn't have great visibility of what they're investing in and so forth. So I'd have to pass on OXLC as an investment that I'd be interested in. So let's look at AGNC. And these guys here, let's look at the description. So AGNC Investment Corporation provides private capital to housing market in the United States and invests in residential mortgage, pass-through securities and collateralized mortgage obligations, which the principal and interest payments are guaranteed by the United States government. Okay, cool. So these guys are providing money that goes into mortgages. All right. Let's look at the performance. So for the last month, looking good. Year to date, interesting. So for the month, 5. Year to date, 5. 1 year, 1.67. That's interesting. And then 5 years. Now, mortgages, I think part of this is that interest rates have increased. And when mortgages are long-term loans, right? Either 15 years, 30 years. And if you have a long-term bond or a loan and you have a fixed rate on that loan, and interest rates drop, the value of that investment drops. And I think that's what you're seeing in this investment is that this company is locked in on 15, 20, 25-year terms on these loans. And when interest rates dropped, which we saw them drop over the last couple of years, when interest rates rose over the last couple of years, you saw their investments go down because it's like, well, the market's paying 5% for cash right now. The Federal Reserve's paying 5% on short-term T-bills. Why should I get a 20-year bond when it only pays 2%? It wouldn't make any sense. So you have to lower the value of that bond in order to compensate the investor. And the investor wants more like 6% yield overall from both appreciation of the bond as well as the interest payments on that bond. So that's what these guys probably experienced. Now, I'm not opposed to looking at companies that invest in mortgages. I think it's a pretty decent idea if that's what you want to do. I've looked at it as well. I'd look at the expense ratio of this, and it looks like the forward yield 13.87. So that's a dividend yield. So it looks like it has a pretty good dividend. So for the right investor, if you're looking for income, I mean, I think it's easy to understand what mortgages are all about. So it's easy to understand the investment. I do my homework on this particular company that's providing the ETF or fund, make sure they're a good, reputable company, and the expense ratio is down. Because expenses, right, on ETFs and mutual funds, they will eat away money. They will eat away money. If they don't outperform the market by a significant amount, it's eating away money, and I don't like them. I like managing my own stocks, or I like going into low fee ETFs, and that's the way that I invest. So thanks for the questions on that. Hopefully my comments were interesting to you. So the next topic is shorting. So there's some companies that I am shorting. Let me tell you the companies that I'm shorting. So I'm shorting NVIDIA, Broadcom, and CrowdStrike, Super Microcomputer, Vertev, and Utilities. So the two companies that are not like NVIDIA are Vertev and Vistra. And let's go with Vistra first. And FYI, there'll be a video released tomorrow on Vistra. And this one here, I started to short and it went down 11% yesterday. So needless to say, that was good for my short position. Vistra is a company that does electricity and power generation. And it's an independent utility that produces power and sells it. Totally get it. Now, utility companies have been a sector and an industry that I have kept an eye on for some time. They tend to be pretty stable and they pay dividends. What I'm showing you here, this graph, this is what utility companies are supposed to do. They are priced somewhere around this price. They go up maybe 10% a year. Maybe they go down 5%. And they pay a nice dividend. But the stock has been up 200%. And it was up 250% at this peak. And you'll see that in the video that's released tomorrow. But it's up 200%. This is obviously, something's out of place here. So I looked into this company. The best valuation I can get to on Vistra, and I'll show that to you. So the best valuation, and when I look at these shorts, obviously I'm not trying to lose money. I'm trying to make money, so I'm conservative. So I give these companies the best valuation, the most optimistic valuation I can, to make sure that I'm not creating a blind side for myself. And I think the stock is overpriced by at least 50%. So Vistra is a company that I have a short position on, and it's working so far. The other company, Vertev, is a company that creates cooling components for data centers. And again, that company is a big, and the forgot the symbol on that. Let me look it up. The thing about like the AI buzz is that I think AI is interesting, but there's risk in having a story that people just fall in love with. Like AI is going to be interesting, but at this point, I mean, how many things is it really doing, right? Not a lot. And an example is autonomous driving. It's taken more than 10 years for um, Google Alphabet to get their autonomous driving company to just operate in a few cities. So it takes a long time. It takes a lot of investment. There's no payback immediately for these companies. So I think people have gotten carried away with the whole AI story to the point where a company like Vertev, which creates cooling components for data centers, everybody's associating them with AI, like, oh, data centers are going to double in quantities and increase rapidly. That just doesn't happen. Data centers, it takes a long time to build out data centers. And Vertev went up 210%. Again, another obvious situation where why does a company that creates electronic components and cooling components, if you look at their products, they're making literally cabinets out of metal. They're making all these low IP products, meaning intellectual property, like NVIDIA. They own IP. They have a design on that chipset that nobody can copy. If they do, they're going to get sued. Vertev does not. They make cabinets. It's like you cannot IP a cabinet. You cannot IP plumbing. So that's another suspect that I put on my short list because I think that the AI story has just been too it's been overhyped, and I think it's beginning to show signs that it's going to come down. We'll see. I could be wrong, but those are two stocks outside of NVIDIA that maybe you hadn't thought of that I decided to short. I'm not shorting a ton of money. I earlier comment around, how do you make 100 grand a year? Well, I'm at a point in my life where, I only want to build my wealth and I want to accumulate the portfolio that I have once. I don't want to put it completely at risk and then end up having very little. No, I want to keep growing it. I want to keep growing it with sensible risk taking. But this one here, I thought it'd be interesting to short a few stocks. The NVIDIA position, I was probably a little early, but on that position, as of this point, I'm making money, not a whole lot, but making money. And I continue to add money. The way that I invest in a stock is the way that I'm investing in these shorts. The way I invest in a stock is I look for a low point. I look for a stock like Meta. Okay, during this range, I knew, okay, this is a really good company. The market doesn't understand it. So I average in my buy in Meta. And in general, I was correct in the trend. I was correct in the observation that the stock is undervalued. I'm not good enough to tell you at this point is going to be the low point. So I'm going to invest $50,000. No. So I just average in my purchase. With my shorts, it's the same thing, which is I'm not smart enough to tell you that NVIDIA's peak is here. And therefore, I'm going to short $50,000 of NVIDIA. I'm not that smart, but I believe that this stock has gone parabolic. Okay. No stock that's ever gone parabolic has ever kept its stock price. So I believe that around this range, I'm going to be shorting shares. So I've bought NVIDIA on 4 occasions, or excuse me, I sold short on 4 occasions, and I continue to sell short week after week until I build up, I think, a pretty solid position. I could see myself shorting $25,000 of NVIDIA, and I'm going to do it over time. And I'm going to continue to do it if the information that I'm seeing in the market continues to support my theory, which is NVIDIA is way overpriced and the AI hype has gotten way blown up out of proportion. So that's my short positions. Not right as it is on any of my live streams or videos. I never provide financial advice. I'm just sharing my experience, and shorting stocks is incredibly risky, but investing in stocks is risky too. Please make your decisions independent of anything that I'm doing. I hope you find what I'm doing interesting. I share my experience so that other investors can maybe learn from what I'm doing, both the things that work for me and the errors that I've made, because I share both things on my channel. When I lose money, I share it. I tell you, this is how I lost money. These are the errors that I made. When I make money, I share that with people, and then maybe they can get an idea that they then do their own research and make their own investments on. So that's covering my short portfolio. Thanks for asking. All right, let's talk about L'Oreal. So this one here is, I'm not sure which one I'm supposed to look at here. So I'll go with the first one. So cosmetics, it's not in my domain of business knowledge, so I can't add a ton. But I would say that this company in particular, I think, is the one that's been around for a long time. Market cap $236 billion. That is a really good market cap. And they built an empire. If you really understand this industry, it's a good investment. I don't invest in cosmetics. The piece that I would put out there is that, I would put, if you look at my quadrant of, desirability, like L'Oreal is somewhat in the green here, and as well as in the gray. They have a lot of competition in the form of other companies that do cosmetics, but their brand is so strong that people will buy on brand in those markets. I know my lovely wife, she likes nice stuff, and she'll buy the cosmetics she feels are the right cosmetics for her. And I understand that. So I'm a guy. I don't get it, but I don't buy cosmetics. So if you understand cosmetics, it could be a really good investment. Okay. But I can't add a ton there because it's not in my wheelhouse. All right, let's talk about uranium. And I think URNM. So uranium, right? If this is an opportunity for somebody that really wants to learn like this market, the uranium market, and understand when is the right time to buy and when is the right time to sell. Because guys like me, I don't get it and I don't invest. But the people that do get it, they can make good money. That's how I feel about oil and copper and iron ore. If you buy at the right times, you can make money, but you have to buy at the right times at the right prices. And I imagine that's the same case with uranium. Uranium is important because I think nuclear power is going to be one of the solutions for more electricity. I know that people are scared of nuclear power because you can make bombs out of it and they explode and kill a lot of people. But power generation from nuclear has been proven to be very safe, and it doesn't emit pollution into the air. So in my opinion, I think it's a pretty good solution. And the US is way behind on power generated by nuclear. And I think we could probably catch up and build power plants in the US. I know that in France, they have a lot of power plants. In Japan, they have a lot of power plants. So it would be a space that, might be a really good space for you. I don't have it in my wheelhouse. I haven't investigated it a whole lot, but maybe someday. This particular ETF, it pays a dividend, so that's good. How has it done over the last 5 years? That's pretty decent. If you look at the return over the last 5 years, the 1 year looks good. I think part of why uranium's rallied, and this is a educated guess, is I just showed you that independent power utility company that's up like 200% just because, hey, we're going to need a bunch of power for AI. Yeah, I can understand we're going to need power for AI, but to have a company have a 200% return that was a utility company go up that high, I think some of that is reaching uranium, and investors are beginning to feel like, hey, uh, there's going to be more uranium demand, and there may be, but I'd study it really well and understand when is the right time to buy into uranium. I found that to be the case with my investments in TX, which is predominantly iron ore. Buying at the right time really makes a big difference. And oil, buying at the right time, like when oil prices are really low, is you buy an oil company because they're kind of sold off. They have a low price. Then oil moves up, and guess what happens to your stock price? It goes up. So that's what I would say on this particular ETF. All right, let me catch up on comments. So Earthbound Misfit, what are your thoughts on LNTH? Never looked at that one, so let's take a look. LNTH. So LNTH Holdings, what do these guys do? So develops, manufactures, commercializes diagnostic and therapeutic products to assist clinicians in the diagnosis and treatment of heart cancer and other diseases worldwide. It provides Definity, an injectable ultrasound enhancing agent in the echocardiography exams. Okay, so they do a med device that people need when they're getting a diagnosis and being examined for cancers and so forth. They're in Massachusetts, so this is a healthcare company. Healthcare hasn't been doing great for the last 2 years, which to me means maybe they'll have a very good, investing run going forward because there's a lot of pent up activity. Wow, they had a nice jump on July 9th. What was the news? Did they have? Okay. So it looks like a Medicare proposal. I guess if Medicare begins to use their products or approve to use their products, that's a huge jump in revenue. So I think that's what caused the big jump in stock price. Okay. If we look at their growth, let's see if they've been growing. Yeah, look at this growth. Beauty. The company has grown tremendously in the last 6 years. They've gone from 343 million to 1.3 billion. Very good. All right. So cash flow wise, they generate cash from operations and have low capex. So this is a cash flow generating high growth company in healthcare. I like them. Their stock price jumped, so it might be hard to get into the stock. Yeah, I mean, obviously hindsight's 2020, right? It would have been great to buy the stock around this point. I think this is a really good company. You have to do more homework, look at their balance sheet, make sure that they don't have too much debt. What's their debt level? So they have $718 million of cash, $561 million of long-term debt. So they could pretty much pay off all their debt immediately. So this is a very sound company, very solid. I have investments in several life sciences companies, pharmaceutical companies. I'd probably be reluctant to take on one more, but this looks like a quality company. I'd certainly keep my eye on it. And the other piece that I would put out there is there's other companies that look like this in healthcare. If you look at life sciences, if you look at my investment in United Therapeutics has been very good. United Therapeutics is somewhat in this space, but different. The company we just looked at, they create a med device that goes in the process of examining somebody to see if they have a cancer. United Therapeutics actually provides a treatment to rare diseases. And these guys have been great return for me, 40% plus in 1 year. They've been growing nicely. If you look at their growth rate, they're beginning to develop really good scale. They generate free cash flow. In healthcare, there's a lot of companies that are looking like United Therapeutics and the company we just looked at. And again, if you look at healthcare from the sector perspective, you'd see that it hasn't been rallying a whole lot. So I think there's a lot of upside potential because prices are not overinflated. PEs are nice and low. Fundamentals look good. So good idea out there. Good luck in looking at that company. Christopher Robertson, finally caught you live. Let's go, man. Love it. Hey, I appreciate the comment. Titan Wheel International. You're in heavy bed with John Deere. Titan slow. Okay. So so I think I have the right one here. Yep. Okay. So these guys are they're providing key components and, providing the pieces and parts that make up eventually a large machine like a John Deere tractor, farming equipment, and so forth. Now, this is an industrial and not a bad idea right now, right? It's not overinflated. It's agriculture. So we need food every single year, and we need farmers to produce food. And this machinery is becoming more important. Internationally, I think farm equipment is sold in the US, but it's sold around the world because other countries need to feed their population and they keep buying equipment, a lot of US made equipment, because the farmers in the US really know what they're doing. So these guys here, looking at the 5-year chart, the price is down, which, by the way, when I look at charts like this, I'm like, okay, this is actually more interesting to me than if I'm seeing a chart, go up and to the right. I'm like, whoa, I think I missed the party. So this is not a showstopper for me. It actually is an ingredient to potentially buying a company at a discount. So, all right, stock price isn't overinflated. It has some short interest, not a big problem. I'm not afraid of that. It's a really small company. Now, as you've heard me say in prior months, man, small caps, mid caps have not been working for the last year and a half. And it's because of the higher interest rates, but they're beginning to work now. So, okay. All right, let's see. So financially, when we look at the revenue did go down. So they've been kind of going up and down for the last 10 years. So that's interesting. I guess it's cyclical. As farmers update their equipment, you see a bump in demand, and then this equipment lasts for a long time. So for a while, they're like, okay, we don't need tractors for a while. So that's interesting. This might be a case where you can buy low and then watch it rise. I'd want to make sure that their balance sheet is really strong. They don't have too much debt. Short term, cash and investments, 203 million. Let's take a look at their debt. 554 million, not too bad. Okay. So they don't have a big debt problem. And with their revenue level, their EBITDA is probably going to be able to handle that debt level, and you can pay it off in less than 3 years. So that's good. Let's look at cash flow. Have they been cash flowing from operations? The answer is yes. Pretty good cash flow. So we're at 179 minus 60. So free cash flow is cash from operations minus capital expenditures, money you have to put back into the business to keep the business operating. So 180 minus 60 is 120. Multiply 120 by like 15. That would be my guesstimate of the valuation of the company. And that would get me to basically $1.82 billion. And they're well below that. So if you think this business is viable and they have a long-term viability, this might be a stock worth investigating. I'm going to put it on my list to look at it closely because it's a small cap. Small caps are beginning to work. It's kind of been beaten down. Okay. That might be an opportunity. And it kind of makes sense to me, right? They have a place in the economy. It's farming. Farming is consistent. We need food. So if the company's strong, balance sheet looked okay, the cash flow, this might be an investment that I want to look at. So I'm going to look into this one, and you may see a video come out on this one. But thanks for the suggestion. It looks interesting. Shadow Guy, good morning. Just curious, see if you check ETF holdings to get investing idea. If I ever check ETF holdings to get investing ideas, I don't. I've never done that. But I'm not big into ETFs. Essentially, like I like to buy stocks. I buy individual bonds, and I invest in real estate and buy cryptocurrencies tiny bit. Even with cryptocurrencies, I don't buy ETFs. I buy Bitcoin and Ethereum, and I participate in liquidity pools. So I do it direct. Sergio, good to see you. What about Google evaluation? Do you find it discounted? Yeah, and I owe you, I think I did the video on the 3 AI stocks that I looked at long-term, and Google was my preferred stock there. So let's take a look at the valuation of Google. Alphabet, they changed their name, but everybody calls them Google. And so here it is, Sergio. Sorry that I missed this on the video, and Sergio was wise enough, careful, or he pointed it out, so I appreciate it. Now the stock price is probably a little dated because I haven't updated it, and it probably changed today. But assuming it's around 182, it's discounted by 14%. Now this is a discount. Getting a fair price on a great company that you believe in, that's I'm willing to do that. And that's so first, answering your question, Sergio. Second, further comments on Alphabet. Alphabet strategically is in a very good place. Their AI strategy, although it's not as well received by the media, they're loaded. They got self-driving cars. They have Waymo, and they've had Waymo for 15 years, and they really made that thing work. They have a cloud infrastructure business that's a powerhouse. They have Gemini, which is a very functioning AI solution that is both in a free version as well as a paid version that you can do more things. It's got Google search. It's got YouTube. It's got these assets that are just game-changing assets. They are clearly in the top quadrant when I look at a company and say, I want a company to be here. This is where Alphabet is. Way up here, highly desirable, strong, wide moat. Is anybody going to replace YouTube soon? Nope. maybe in 10, 50 years, I don't know, a long time from now. And if you look at their AI business, it's not really priced into the valuation. We don't see the AI business in their current cash flows. We don't see their AI business in their current market cap. So you're getting it for free. You're getting AI business for free. That's the way I see it. So I keep buying shares of Alphabet. I bought shares yesterday on the drop in price. So thanks, Sergio, for watching my videos. And thanks for asking your questions, which usually are very like precise. And I could tell that you're watching the videos and watching them carefully. So I appreciate it. Shadow Guy. Okay, so I think you provided an example. Thank you. And I think this is back to your ETF question. Okay, so this is so small cap value. You know, investing is very like specific to how you want to operate your investments. I shared that I like buying individual stocks and I like buying individual bonds, and like I invest in real estate. I don't buy, I do have a real estate investment trust and CTRE, but for the most part, I buy investment real estate, and then I own it. My wife and I own it completely, and then we rent it out to people. So, but other people have a different method or comfort level, and ETFs are good for them. Both are fine. If you like ETFs, awesome. I like the thought process of, okay, small caps are beginning to work, so I want to participate. Well, participating through ETFs is a pretty good idea. If you don't want to look at, or maybe you have a career that's really demanding, takes a lot of time. Yeah, ETFs, awesome. So I think this is a good idea because there's a big move to small cap, mid cap, and it started a week ago. If that rotation of capital out of big cap, big tech into small caps continues, it's going to feel really good returns. Like you saw that this ETF value jump in the last week. This is gonna persist because it hasn't done great for the last. Looking at the chart, in 2022, the fall, October, is when the S&P hit its bottom and then it went up. The NASDAQ. And if you look at the rise of small caps, it hasn't matched the NASDAQ and it hasn't matched the S&P. So I think there's a lot of pent up upside in small caps. They also have better valuations, better PE ratios, better cash to stock price ratios. They have really good ratios. They just were not desirable by the market. The market was like, oh, I want to buy the Magnificent Seven stocks. That's where I'm going to put money. And that move really worked for the last 20 months. Can't argue with it. If you bought NVIDIA 2 years ago, you did great. If you bought Meta, you did awesome. If you bought those 7 stocks, you did great. So that pulled a lot of capital away from small caps. But now that capital is rotating back. So I think it's a really good idea to think about it. Dividend rate is a little low, but when you deal with small caps, I would expect that you're investing in companies that are going to grow revenues, right? And you're buying into growth. You're not buying into income. So that makes sense. So good idea. Good idea to be, hey, if you want to quickly jump into small caps, here's some ETFs. Very good idea. I'd want to look at the expense ratio because expense ratio 0.25%. See, that's what I like to see. The previous one that we saw, like at 12%, I was like, whoa, that's maybe the highest one that I've seen. So be careful with that. This seems really low. Very good. That's not gonna, hurt me too bad. And it gets me into small caps. So I'd look at their holdings, and looks like they're in financials, which is doing good. Consumer cyclical, industrials, energy, basic material. Very good. It's a good idea. KB home builder. And you see how they spread their capital, high diversification. Very good. Thanks for the question, Shadow Guy, and for pointing out that ETF. Omar, very good to see you. How can I make profits investing $350 a month for the next 10 to, if you don't index funds? Okay, cool. So if you invest $350 a month for the next 10 to 15 years, you're going to be sitting on a really good pile of value at the end of 10 years and at the end of 15 years. I would say early on, like first, you got to put a course of learning and investing in yourself. Like just learn as much as you can. Try to pick out like the industries that make sense to you. These could be things that you've worked in. Hey, I worked at like my son is doing an internship at Amazon at one of their distribution centers. So he's going to have a little bit of knowledge on, logistics, warehousing, and Amazon. So he might be a better investor in the future for those types of industries and definitely for a part of Amazon. So that's an example. So really learn investments that relate to something that you already have a knowledge advantage on. Now, early on, I think ETFs are a good idea if you're just kind of beginning to grow your wealth. Early in my career, I invested predominantly we called them mutual funds back then. ETF is a term that I don't know when it started 10 years ago. And it was a good idea for me. I still wanted to understand economically, like, hey, okay, what industries are working and what mutual funds do I want to be invested in. But even as far back as, 1995, I was buying individual stocks and companies that I really believed in. It was I think a small portion of my portfolio back then. But over time, that pretty much became, 100% of my portfolio is individual stocks. But that's 30 years later. So I would say that it's a very good, you're on the right path, which is thinking 10, 15 years into the future. Awesome. $350 a month. Awesome. So you're 2 for 2. And I think going into index funds, not a bad idea. I would encourage you to go beyond just like playing the whole field. I would encourage you to go to places and industries that you have a knowledge advantage in. Again, things that you've already worked in, things that interest you, and learn that. Also, look at industries that make a lot of money, right? It's not hard to find, the companies that make a lot of money. Go to the 10 most valuable companies on the stock exchange. Microsoft, Apple, Alphabet, Amazon. And you go, okay, that's who makes the most money. Those are the most valuable companies. So let me learn that. Why does Microsoft make so much money? And that's the question that takes years to answer completely. But if you learn how Microsoft makes money, you might be able to find other companies that resemble Microsoft that are undiscovered, and you can buy those at the right time and make lots of money. So I think you have a great plan, and keep it simple first. Index funds, ETFs are a good idea, but I would encourage you, look, keep growing your knowledge and go to places where you have an advantage. Go to places where it's worth investing your time. I say this often is, you have thousands of stocks to pick from. I like picking the stocks that make the most money, like the Microsoft's, Alphabets, and so forth, because those will be valuable for a long time, if not forever. Where other stocks are a greater risk. They may make money for a year or two. For example, the solar stocks, they were on fire 3 years ago, and now they're like undesirable. That's an example of something that was hot, and now it's completely uninvestable to some extent. All right, Nighthawk. Have I heard of HCHR? Kathy Wood sold some of her stake in Tesla to buy it. HCHR. Archer. Yeah, I have heard of these guys. And I believe these guys are trying to do electric helicopters, and these helicopters are going to provide um, like um, I guess private uh, 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 Uber-like transportation from, let's say, one hub to another. Like I live in Los Angeles, so from Los Angeles to San Diego, they'll give you a flight from point A to point B. Now, this is kind of an early company, and I'm going to expect that their financials are going to look terrible. So if you believe in this space, understand this space, it's a different game. It's not an investment I'm going to make. I'll put that out there. And the reason for it is look at their operating income. It's just heavy losses. So if these guys pull it off, that's great. Now, do I understand helicopter businesses and this whole piece? I don't. Do I think there's some concern around it? Most definitely. I don't know that governments, cities are going to want, helicopters flying at, at all times of the day. I think the volume is going to be limited. But you look at their balance sheet, $405 million of cash. They should have no debt, close to no debt. Okay, good. Very good. Cash flow, they're probably burning cash. Yep. So they're burning cash, and they're really burning $344 million per year. They have $410 million on the balance sheet. So they have like a year of cash to burn before it really begins to get dicey. This is a long shot, but if it works, I think the investor is going to be rewarded. They IPO'd not too long ago. This is not an investment for me. I think that the risk is really high. There's a risk that there's a complete, and again, I provide no financial advice. I'm just telling you how I see it. There's a pretty good risk that if I bought a share of these guys, I could lose 100% of my investment. And the upside is there, but the upside's there with a lot of stocks that are far better financially than this stock. For example, Chegg. Chegg has been beaten down so bad, but it's because everybody thinks that AI is going to put these guys out of business, and it may really compromise their business. But when you look at their business, they have a pretty solid business. It's not growing the way it was before, but you look at their cash flow, they're not burning cash. They're actually generating free cash flow. Looking at the wrong line. So they're generating free cash flow. So Chegg potentially is going to be an AI company because they're going to use AI to help students with their education and so forth. So this is a stock that I'd rather take a chance on versus aviation, which is completely outside my knowledge domain, with a company that's burning cash, with a company with a terrible balance sheet. If you look at the cash they have versus their cash burn, that's my opinion on it. And hopefully you found it interesting. Thanks for the question. Android PC gameplay. Find Oklo Inc. Some kind of nuclear energy producers. So yeah. So the utilities, I wonder how. So these guys are these guys an energy producer in using nuclear? So these guys design and develop power plants. This one might be interesting because there definitely is going to be so these guys design and develop fission power plants. And I'm not a scientist. I think there's fusion and fission, and somebody else would have to explain the differences, but you get energy out of that. That's interesting. Look at their stock price here. Okay. So when we look at their income statement, really small company. Wow. Like $9 million of revenue. But I'm sorry, no revenue. Sorry. No revenue. They're just, getting started, pre-revenue. Yeah, this is outside of my investing realm. They have some cash. It's an interesting business. I mean, if you have a knowledge advantage here and you believe that these guys have what the market's going to need, then that'd be an investment worth considering. For me, I'm nowhere near in that position, so I'd have to pass on this. But it is an interesting business based on where we're at with the demand on power. Mike, the dividend investor guy. How you doing, Mike? Um, you're smart enough to realize that you are not that smart. That's smart. Yeah. I like to say that I don't ever pretend to feel like I'm smart or intelligent enough to, like, let's say, know when a stock's hit a peak or a trough. But I'm 55, so um, I think I've built a little bit of wisdom to know that certain things. I heard something that was profound recently from one of the big, super investors. He was being interviewed, and he said he's made more money from the obvious trends that he was seeing versus the very specific trends that were maybe an obscure kind of trend. And it kind of like landed pretty strong with me, which is, yeah, you know what? If I look back, there are some trends where it's kind of obvious, like back when PCs, right? I got my first PC. I bought it, coming out of high school, going into college, and I paid as much for my PC back then as I paid for a car that I had, little truck, and got this PC going. And at that time, it was obvious everybody was going to need a PC. So the PC build out was humongous. And I think Microsoft, Intel, I mean, these companies were built in that era. That's an obvious trend. And those are the trends that, I'm really looking for, because they're a little bit more like wisdom based. Like, okay, that's an obvious trend. Where could I find good, solid companies that I can invest in? I don't have to hit grand slams or have a perfect score on my investing, report card. But if I invest in the right companies in the right spaces with the right trends, I'm going to make lots of money. And that's what I'm trying to do. I appreciate you attending, Mike. Appreciate it. How long have you been investing? So call it 30 years, and investing in individual stocks, 30 years. I'll start with my biggest errors, biggest mistakes. I bought Webvan, and Webvan does grocery delivery. Sound familiar? They were Uber slash Instacart 20 years ago. It was ahead of its time, way too ahead of its time, and it went bankrupt, and I lost my investment. I didn't lose a ton. The other one I lost a lot of money on was Sun Microsystems. Sun was the premium hardware company, and I bought them going into the .com build out, and when the .com bubble burst, I lost 90% of my investment on Sun. I've had some good investments. I bought TSM really low and I sold really high, and I sold before 22. So I made a really good gain there. I've had a string of stocks that were really good game changing stocks, Meta, and real estate. I bought 5 investment properties in 2010 following the subprime market meltdown. That ended up being the best investment I made in my life. I made a lot of money on that decision. That was an obvious kind of situation where real estate, it's not going to go anywhere. It's a hard asset. Warren Buffett at that time was saying he would buy individual single family homes if he knew how to manage them, because the prices were so good. The valuations were so good. So I put fair amount of capital and, did well with that. Real estate now, in my opinion, is not good. So not a good investment at this time. For 2024, I'm not buying any real estate. That's just my opinion. So Thanks for the question, Omar. AMR is considered coal stock, but it's more of an industrial coal for iron. Good. So, all right, let's take a look at AMR. I am an investor in TX. So, Alpha Metallurgical Resources. So the stock is the 1 year 102%. Wow. Down 8%. Man, that's a pretty good return. But year to date, it's down 8%. Okay. So the short interest is almost 10%, market cap of 4 billion. And so I think these types of companies are not a bad idea. So mining company produces, process, sells in Virginia and West Virginia. Okay. So I understand what they do. With this company, they're going to depend on commodity prices. As steel prices go up, this stock's going to go up. As steel prices go down, their revenues go down, and therefore their stock's going to go down. These guys have been growing their business. And I know they're having a down year because steel prices are down. That's a pretty good sized company. When we look at cash flow, cash from operations is good. Their trailing 12 months is good. And their last full year is $851 million cash from operations. They put $245 million back into the business. So free cash is going to be 851 minus 245, which is going to give us $806 million. I'm sorry, $606 million of free cash for 2023. All right, multiply that times 10, and we got about 6 billion would be a market cap that I would guess this company should be at, and they're at 4. So there's potentially value there. Now, they don't pay a dividend. That's interesting. TX pays a dividend, and I could show TX. TX is in a similar but different business. I think they're different. They're down in, so this is a company headquartered in Luxembourg, but their biggest operation is in Mexico, second biggest in Argentina. Then they have other smaller operations, and they pay a nice dividend. Okay. And that's why I'm like, hey, how come these guys don't pay a dividend? I want to understand that. What was their dividend history? Why are they not paying a dividend? So, yeah, I'd want to know why, because their competitors, like if you look at BHP, that's another one. BHP is down in Australia, and they mine for iron ore, resources, and put them to market, and they pay a nice dividend. So yeah, I mean, that's not a bad idea. Buying in at the right time. I think the prices for steel aren't that high, so this is a good time to buy, because then when steel prices go up as the economy goes up, you'll see the stock price for this company go up. I'd study their financials, make sure their balance sheet's strong. I know we looked at cash flow, make sure they don't have too much debt. So they have 269 of cash. So 3 million long-term plus. So they have very little long-term debt. Very good. Yeah. So, this is a good company. It seems. I'm already in TX, so I wouldn't be all that interested in another company like this one, unless this was like a super awesome investment and I sell my TX and buy this one. But, good luck with it. I think it's worth taking a closer look at. All right, Shadow Guy, study physics. Long story short, I am pro nuclear. Yeah. And I agree. I think nuclear got a bad rap, especially in the US. And I think it's more fear. In my observation, it was a lot of fear without a lot of facts. I think nuclear is proven to be relatively safe. We have power plants, talking about LA. Uh, we've had power plants that burn natural gas or coal and they emit into the air. So it's like guaranteed pollution. Well, you have nuclear that is somewhat of a feared energy source that could end up being quite bad, but for the most part has proven to be very safe. That doesn't emit air pollution, so we don't breathe it in. So which one is better or worse? I'd like to see us use more nuclear because I think it is a safe energy source. Mike, the dividend guy, thoughts on ELV? Well, ELV, I did a short on it. So Elevance had a bad earnings, believe on, was it Monday or Tuesday? They didn't grow their revenue. Now, this is a solid, consistent company. Check out this chart, 10 years, up and to the right. This is a healthcare payer. This company is a health insurance company. So when you buy healthcare insurance, you're buying it from Elevance or United Healthcare. And how did I get to Elevance as an investment a few years back? I was an investor in United Healthcare, like starting way back, like 7-8 years ago. And I did really well with it, but the valuation kept getting worse and worse. The stock price kept going up, but their cash flows weren't growing at the same rate. And their revenues were not growing at the same rate. So I thought it's a good time to switch horses from United Healthcare to Elevance, who had much better fundamentals. And I'm glad I did so. Now, this week, they've had a bad week, down 6.7%. This is when they announced their earnings. They didn't grow their top line revenue. They lost what I'm going to call is subscribers, right? People that have their insurance. Their cash flow, free cash flow went down. So it's kind of like a very bad report card. Now, I know Elevance for years, and they've been a really good, consistent company. Now, if it's a bad earnings report and they get back on track and get back to growing their revenue, which, a healthcare payer of their size, because they're massive, if they can grow a couple percentage points, I'm happy. If they can get back to their free cash flow, that's really important. I'm going to be okay. Because right now I'm sitting on a good gain of Elevance. I bought more shares on this drop. I'm probably going to buy more shares at this price because healthcare insurance is something that everybody needs. And, the demand for it's going to be very consistent. So you can either buy into United Healthcare, Elevance, or another one like Cigna has a pretty good fundamentals kind of profile. So in general, I think Elevance had a very bad earnings. Okay. That should not be lost. I think the business is okay. It's a quality business. But you better believe that the next earnings for Q3, they better put out a good earnings report. Because if they had a bad earnings report followed by a bad earnings report, I think the stock's going to crash. And I'd probably sell at that point because I'd be like, what's going on? Why did you have two earnings reports that are really terrible? So that's my story on Elevance. I'm an investor. I own upwards of 50 grand of this stock and have been overall, I'm happy with the investment. At this point, I'm happy with the investment. Am I a little concerned? Yeah, I think so. Because again, there was enough in the report to make me concerned. It also follows United Healthcare announced the day before Elevance. United Healthcare had a very good earnings. They grew their top line. They had all the right things that you want to see. And then Elevance came out with a flop of earnings report. So thanks for the question. They pay a very small dividend, by the way. I don't buy them for the dividend. I buy them for the appreciation, which has certainly been good over the last 5 years. So I'm glad I'm an investor in Elevance. Thank you for asking the question. So do I want to create a community Discord server? So, I tried using Discord, and I use predominantly YouTube, and I wanted to start. I don't know if you were on at the announcement, but this Sunday, I'm going to start a conference call. And if you want to be a participant, you're invited to. You just need to provide your email. And I provided my email address earlier in the live stream. Let me pop it up here again. And you're invited. A Discord, I think, would be interesting, but I don't know that I could handle one more, text-based platform that I have to manage. So I'm probably not gonna create a Discord server, I guess. I have the YouTube channel. I do post on Reddit, and I think Reddit's pretty good. But predominantly, it's here. Just come to YouTube and message me on the community tab within YouTube, and then join the live streams and join the conference calls if you want to be a part of it. But keep making the suggestion. Maybe at some point I'll start a Discord server like you're suggesting. I did go into Discord a few times, and frankly, I just either didn't get it or didn't have the time and energy to get into it. But keep suggesting it, and maybe someday I'll do it. Thanks for the comments. My major concern about Google is that their Google searches may go down due to an AI chatbots now. Yeah, I think that's potentially a risk. Yeah, I would agree with you that it's a risk, but it's not reality just yet. I think that AI, again, if you look at, for example, ChatGPT on their website, say, oh, we got 35 million registered users on our platform. So, all right, cool. Meta's got 3 billion. Google search is used by multiple billion users. So the scale of Google search is massive. And I think AI it doesn't, if you had a chart, you wouldn't even register. Could that change? Absolutely. But when you look at Google search, it really does the trick. Like, I had my wife's car serviced, and I wanted to look for a technician for a particular issue that the car was having. Google search. Google search all day long. And I think that Google has Gemini. So if you've used Gemini, it's very good. ChatGPT is very good. But Google has billions of users already. And you look at Gmail accounts that Google has, that's a lot. And you have YouTube. So they can present their AI to a very broad audience. And they could actually evolve Google search into it having more AI specific functionality. And then therefore they actually capitalized on AI and made it an opportunity versus it being a threat. But I agree with you that, AI could be a game changer, but, we'll see. I think it's going to take a while. The Quags, good morning. Yeah. So I think what you're saying here, Shadow Guys, look at ETF holdings and look at the top 10 companies they're invested in. That's a good way to kind of like get ideas, most definitely, that are in small caps. My preferred method is always starting with industry, because again, when you line an industry up with your personal information advantage, then you're going into companies that you're going to better understand, and they could be small caps, and then kind of doing your research. But I get that point. Thanks for bringing that up. I'm going to go another 5 minutes, guys, but got to get going and start my business day. Christopher Robertson, our currency is backed by economy and oil. I heard Brentwood agreement is ending. And what we do when retirement accounts pay out in American dollars. These are big topics. The thing that, I think the U.S. is in an enviable spot. The reason why the U.S. dollar is, really respected, and I think the U.S. economy is an economy that pulls so much investment, is because it's a country where we just talked about Google Alphabet. Those guys didn't exist 25 years ago. And then two guys graduated from a university and started Google, and he started Google search. And now it's a $2 trillion business. That type of value gets created in the US because of its society, politics, economy, capital, all those things. I believe that's what's going to keep the US dollar strong. That is what's going to keep our retirement accounts strong. That's, I think, going to last for a long time. Is the US is going to be valuable for a long time, and US companies are going to be valuable for a long time. There's other countries that are really building their countries quite strong. Japan was already strong to begin with. It was really underpriced. And Japan, I know that their stocks have done really well because they've gone up in price. I'm not a big investor in Japan. I just know because I read, and I know Warren Buffett's made money in Japan. China is a big, big economy. They're, high level. They're doing a really good job in building out the value of their companies and so forth. I invest in a couple companies in China, but it's a very small portion of my portfolio. I think India, I've heard, is really building out their economy. But I'm in the U.S. I invest in predominantly U.S. companies. I do not sleep. I do not lose any sleep at night thinking, is the U.S. dollar or the U.S. economy going to be hurting in 20 years? I actually think it keeps getting better and better. That's my point of view. Yeah, thanks for asking about OKLO. It was interesting to take a look at it. What's your view on NOTV? NOTV. So this is a tiny cap, 56 million. So they provide non-clinical analytical drug discovery development services for pharmaceutical medical device industries. Okay. So they're a services company, and they provide the services to a pharma. And in this space here, this isn't my preferred investment. I like investing in the pharmaceutical company because back to this, right? A pharmaceutical company like Eli Lilly is just doing really well. They're here. They have patents on their drugs that keep competitors from coming in and replicating their drug. And you have other pharmaceutical companies, life sciences companies like United Therapeutics. Their IP was defended recently, and they kept a competitor from selling a like drug. So that acts more like a little monopoly to solve certain medical conditions and so forth. The company that you're bringing up is maybe in this space, in the gray, which is less desirable. And the reason for it is they do services, and services could be, replaced. Somebody else comes along with a better price or a better technique, and they take your business away. So that's one of the reluctant points that I would say, I wouldn't be all that attracted to that business. But looking at their revenues, they've grown tremendously. So they're doing something right. They are somewhat profitable. They do lose a little bit of money last year. So they have grown a lot. They're tiny. Balance sheet, I'm hoping they don't have any balance sheet. They have a little bit of cash, 35 million. And their balance sheet, so their long-term debt's a little high. So $369 million. And they have a pretty high debt amount. So I'd be careful with that. Cash flow. See, the cash flow, okay, but it's been negative, positive. Yeah, I mean, I think you can make this company, you can make the valuation probably work. I kind of spoke too soon because their CapEx, you see this CapEx number, they're putting more money into the business, at least in 23, or just about as much business money into the business than they got out of it. And then in 22 is very negative. So it's really small. It's not in the ideal space within pharmaceutical that I like, or life sciences or healthcare. They provide a service. My worry would be their service could be replaced, and they're tiny. This stock price worries me. Investors that see a stock price this low usually have a lack of confidence in a business like this. Hey, Mr. Market. Hey, I'm glad you're on the live stream. I'm glad you like it. Thanks for joining. PayPal or SoFi? PayPal. Free cash flow. SoFi burns cash, and that's my position. PayPal's growing their revenues. PayPal might be one of the most hated companies on the stock market. At times it feels that way. But we'll see. So far, the market has not made the PayPal stock price go up, and continue to hold my shares. So tell Omar not to rebalance his mutual funds or ETFs, higher returns with only slightly more volatility. All right. Well, he could read that comment. Cool. So huge buyback instead of dividend. That makes sense. And again, that space, if you buy at the right time, it could really be a good investment. So Domino's is really down. And, I haven't looked at their earnings yet, but I heard that they met their guidance, but I think their guidance, they met the targets that were set on the current quarter that was closed, but the guidance they provided, I think, is the part of it that freaked out the market, and it's down quite a bit. I've looked at Domino's, over the years to see if it's the right investment. And you know how I said earlier that there's thousands of stocks to pick from. And I own one restaurant stock right now, and that's Starbucks. And the reason I own Starbucks is their model's simple. Predominantly, they make coffee. Coffee has great profitability. It's simple. You get beans. That's somewhere in your supply chain. Those beans get roasted. You bring them to a site. You grind them. You pour hot water on them. You give a cup of coffee to a customer and you charge them $4. I like the business. Where a Domino's is, it's more involved. You have ovens, you have pizzas and doughs and ingredients and perishable ingredients, and you've got all kinds of things going on, as well as other restaurants could be even more complicated. So I don't invest in restaurants. The only one I'm invested in is Starbucks. I like picking businesses that just inherently are making money. Like, studied the Microsoft financial statements, and it's like crazy how much money they make. It's crazy how much cash flow they produce. And you look at their valuation, over $3 trillion. So I'd rather look for businesses that could be the next Microsoft. Like, I'm big on Uber. I'm big on Airbnb. I'm big on, businesses like that. All right, Quags. I think we've looked at Kava before. And Kava, I just talked about restaurants. So I just talked about restaurants and how I don't like restaurants. I do remember Kava. They are, I think, a healthier alternative. And, I'll leave it up to other investors to invest in restaurants. I know some have made money at it. But for me, restaurants they're just not the type of business I want to be an owner in. If we look at this guy, right, I want businesses that are in this, they're almost a monopoly in their particular industry. Microsoft, Google, Amazon, Eli Lilly. Restaurants, almost automatically I put them in the red, because Kava's got to compete against Chipotle, McDonald's, and local mom and pop and this, and the barriers to entry to compete against Kava almost don't exist. And just about anybody knows how to cook and puts a restaurant up. So that's why I don't invest in restaurants. Starbucks being the exception, and I explained why it's the exception to me. Right now, Starbucks has been beaten down. I like buying beaten down quality because quality businesses are here to stay. And I like the Starbucks business, even though the market thinks that their management team is terrible. I buy the business. Management team can be replaced, but you can't replace the business. A very good session. Cinematographers, appreciate you joining. Let's see if we can shut this thing down. Great discussion. Do me trash. I love these handles. Starbucks a good price. Again, I just shared my comments. I had a video on Starbucks on the channel. Search for it's not that old. I think it's maybe a couple weeks old. And I think it's still, I feel the same way that when I did that. Win casino stocks. I do like casino stocks. Win is not my favorite. Boyd Gaming is my favorite in this space. The reason I like casinos is, I'm not a big gambler. These guys make money from people that gamble, that want to have a good time. People are cooped up for the dividend, the COVID years. They can't wait to get out and have a good time. So Wynn Resorts, looking at their revenues, they've been growing nicely. Wow, they doubled. I guess, did they acquire a business or what happened here? That's a big jump. What's their stock price been doing? So Wynn, one of the things that they suffered was their founder, Steve Wynn, he got in a lot of trouble. I think he had a lot of personal issues with staff, and I think he was asked to leave the business. But the business is he built a really strong business. He really knew casinos and how to make the experience of going to a high-end casino that attractive. Now, balance sheet, I'm expecting these guys are going to have a pretty good load of debt, because they have to build these big casinos. And I would consider that when you look at their debt, you got to look at the assets that they own, right? If they own properties in, for example, Las Vegas, what's that casino worth? And yeah, they carry a lot of debt. So that would kind of be forgivable if they have a high debt balance. Cash flow. Again, I've looked at Boyd Gaming. I like Boyd Gaming, but and Boyd Gaming would be a small cap. And but this one here, so cash from operations was really good in 2023. It's been kind of up and down, but you could see that before COVID, wrecked this business. Understandably, it wasn't their fault. But before COVID, they were generating good cash. CapEx 442. So roughly they do about 800 million in free cash. I'd probably apply a 15 times 800, which would get me to about 12 billion in market cap. And these guys are at 9.4. So you can probably get to a nice discount on the stock. And I would encourage you to look at, if you're considering Wynn, look at Wynn, but look at like their two main competitors, maybe other participants in their marketplace. Pick the best one, So I think it's a space that makes sense to me. People are traveling. Airlines are selling more tickets than ever. Record number of people getting on airplanes and traveling. And they're traveling to go to Vegas and have a good time. They're traveling to Macau over in Asia and stayed in a Wynn resort. So not a bad idea to take a look at. Good luck. Hey, thanks, the dividend investor. Hey, hopefully you guys can join on Sunday. It'd be nice to talk with you guys. It's me talking on these live streams, and I've had some guests on the live stream, but it'd be great to get on a video conference and interact. If you are comfortable getting on camera, awesome. If not, no big deal. Just participate, listen, or maybe ask a question, or maybe add your thoughts to a particular topic that comes up. We're probably going to talk about the market where it's at, maybe a few stocks. I was thinking we could take a stock and go through my whole valuation process then people could ask questions along the way, like, hey, how did you get that free cash flow? Why are you using this growth rate? Those kinds of questions that are really hard to ask on a live stream, because you'd be messaging me, and I can't read messages and do the analysis at the same time, but on a call I could. So hopefully you can join on Sunday. Provide your email address. You can email me, and then I'll get you on the invite list, and we'll go from there. Citigroup is one of the stocks I plan buying for the next 15 years. So a couple of things there. So I'm glad that you're looking at Citigroup. I think it's pretty quality stock right now. I think it's of the big banks, it's the one that I decided to buy. But I encourage you to think about, have a long-term mission, which is, hey, I want to have $1 million in 15 years. I want to have $500,000 in 15 years. I want to have my own home, and I want to have these things. Those are good things to have a vision on. But when it comes to a stock, the great Warren Buffett just sold Paramount. And I'm sure he said, I'm going to buy Paramount and I'm going to hold it for a long time. But he had to reassess, and he probably reassesses every stock. He's been selling some of his Apple shares. So if you buy any stock, reevaluate it at least once a quarter, preferably twice a quarter. Not because, you're a day trader and you need to be buying and selling. You got to stay current. And if that company begins, maybe a new competitor comes in their market, well, that might be a reason why that company is not worth what they are. Or what if a company starts a new business, like I talked about Alphabet having this AI thing, and what if it becomes a big business? Well, I'm going to buy more shares. So reassess your investment. In this case here, Citigroup. Analyze the company every quarter, so you learn, you stay tuned with the investment, and just treat it as, should I buy, hold, or sell at least once a year? Like, am I still a complete believer in their business? Has their business changed? Did they get sued like 3M, right? They got sued big and they had to pay billions. Well, that changed the valuation. So things will change the valuation. So I think conceptually, very good for thinking long-term, but just don't buy and hold a stock for 15 years and never look at it. I don't think you plan to do that, but that would be what I would say out there. So, all right. So good session, Mr. Market. Thanks for joining. So solve I've done, then AG. I'll tell you what, I'll do, if you show up to the conference call on Sunday, I'll jump on one of those and I'll do it. Right now I've got to run. And I'm going to have to kind of scoot out of here. Cool. You should start I think you meant club, right? At this point here, I do have clubs. Yeah, cool. So you could become a member of the YouTube community. I think my channel, I think it's $10 a month. If you wanted to be a member, that's great. I'd appreciate it. Not mandatory. If everybody could attend, if you attend the live streams, get value, that's great. That's payment enough. Let's try that, conference call, see what we can do with it. If the community, gets more valuable for investors and more valuable, that's what I'm searching for. I monetize, I guess, my involvement in YouTube and investing. I make money from my investments, and that's what I get out of it. I've learned a ton from YouTube channels like Scott's Due Diligence. I've watched, 500 or 1,000 hours of his videos over the last 5 years. So what I owe Scott, geez, I don't know what price tag that would be. So, doing this channel, first, I enjoy it. Two, it's been really nice to get to know some of you guys. And let's, keep the feedback coming. I'll evolve in places where I think I could add value, and where I cannot, I'll be honest about it. Like, hey, that's a space that I just don't know. I don't think I could do it well, but keep the feedback coming. So that is it. Very good session. Very good questions. Thanks for bringing it. Just a quick peek at the markets. What's going on? So looks like the Dow is down a bit. NASDAQ is down a little. NASDAQ's down 0.4. Russell is still rallying. Man, go Russell. Stepping up its game, up 5% in the last 5 days, up 11% last month. All right, small caps continue their drive upward. The NASDAQ continues to lose value. Let's see how the day trades. I'll have another live stream on Saturday. If you want to join on Saturday, I'll do another live stream like this, and then the conference call on Sunday. Everybody, have a very nice Thursday. Thanks a lot for tuning in.